Good morning, gang. Good morning. Welcome to this week's Bitcoin update. First and foremost, as usual, nothing discussed today is financial advice. This is just my view of the market, and everything is for educational purposes only. And now that's out of the way, we can begin. So what's been happening? Well, not a right lot. We're still going sideways, as we can tell by the sentiment. Everyone is bored out of their minds. So yeah, we're still ranging. Monthly still pretty much looks exactly the same as it did last month. We have had another spike down since, but again, nothing's changed there. Weekly, we're flat. Obviously downtrending. We're flat right now. And daily, yeah, we're just going sideways. It's just sideways. There's nothing else. Obviously, we touched upon this last week, in last week's video, that we had finally broken out, and I say that term loosely, of this channel that we've been monitoring for quite some time. Now, obviously, we did get that back test down here, but so far the reaction off this is, well, we've had a bounce up and then we've now gone sideways again, so it's not the strongest of reactions. If you were uber bullish, then you'd have either been hoping for this breakout here to run, or at least this backtest here to run. But so far, we're just continuing sideways. So this channel is still relevant, still worth keeping on your charts. It's still on my chart. But for now, we're not seeing any sign of strength really. But to be fair, we're not seeing any sign of strength from both sides. We're just hovering sideways. So, what did we talk about last week? Well, let's zoom in, shall we? Zoom into the 1 hour. What were we talking about last week? Well, I believe that last week we were hovering around here, and we were saying that we're potentially looking to sweep these lows here. And that's what we were looking for, and I believe I've got an image of it somewhere. Yep, I do, over here. So here's a snippet from last week's video. And we can see that we're hovering around, and what we're talking about, obviously we're just taking this low here, taking the stops from here, which seems to be a current theme at the moment. We're just stop hunting all the way down, and then we were looking at taking these stops out here, and then potentially getting a reclaim of the value area low. And obviously where we are today is we got that sweep of the lows, we cleared up all the stop losses out of here, we got a good healthy bounce out of this, but then we've retraced and we're continuing to go sideways. So let's make things look a little bit better. Now let's go back out to the 4 hour. Let's throw it on a volume profile and see if anything's updated on the volume here. So no, nothing really has changed since last week. The only difference is obviously the point of control is now down here, and we're hovering around it. I was saying on Twitter yesterday, if anyone follows on Twitter, if you don't, the link's down in the description below, that very, very simple plan right now. Lose this point of control, then I'll be looking down at the value area low. Lose the value area low, and I'll be looking for the June lows. Let's do this. What was a key level? There we go, that'll do. Key level. And obviously that marks our overall range lows. In fact, let's get rid of this and let's put it on as a range, like we have been looking at for quite some time now. So obviously there's the current range. Okay, so very, very simple, level to level. This is from a high time frame perspective. Lose this point of control, I'm looking at this value area low. Lose this value area low, we do have a small consolidation down here that aggressively bought up in this week. If we zoom into the 15-minute, we can see that, where are we going? There, we can see this a little bit better. So we've got a small little consolidation here. Now, there were some big orders that came in here. There were also a heck of a lot of sells that was trying to push back down. And that's why we got a trigger to go long in this region, because loads of breakout shorts came in this region at the time, and then price reversed on them. So obviously squeezing these guys out. So in the group, a few of the guys took longs in here, me included. So if price does end up, let's just zoom back out again so we can see there. If price does lose this point of control, lose this value area low, then first and foremost I'll be looking at this region here, which is coming in around what, 18.4 give or take. If that doesn't hold, then we're looking back down at this overall range low, the June lows. And once again, like we've been saying for quite some time in the group and publicly on YouTube, didn't mean to do that. Let's get rid of that brush there. Then if we do come and revisit back down here, then I would either be looking for a swing failure and a reclaim of this, trap all the breakout traders that are short in this and looking for lower prices, reclaim, and you got a nice long trigger there. But again, you're still playing this range, so I'm not saying that that's a long and then we're going to new all-time highs, or we're going to the moon, or 30, 40, 50k, whatever you want to say. You know, it's just reclaim of the range low, and we're still continuing this range. You know, this range could go on for a long time. I think anyone new to the market doesn't really realize how long crypto and Bitcoin can go sideways for, and all it does is just bore the hell out of people. So, you know, we joke around it all the time. If you don't understand how to trade a range, or a range bound environment like this, why are you trading? You know, if your strategy is just to long, wait for an uptrend, wait for a high time frame uptrend. Don't start longing every single move within a sideways range and hoping that you're eventually going to get that breakout, because you're just gambling. You're just gambling. If you're trading the range, you're long in the lows, you're short in the highs, long in the lows, short in the highs. Eventually, the range will break to one side. We don't know what side it's going to break to until it happens. So eventually, you're going to get stopped out and you'll be wrong. But if you don't understand how to trade a range bound environment, especially when price is getting so tight, you know, the consolidation is, you know, once was large, then it got smaller, and now, look, we're really small. So if you can't trade this, you know, some consider this as chop. You know, this is our bread and butter in the group. You know, we love a range bound environment because it's technical. You know, it's just level to level trading. You get your key levels on the chart and you trade from them. Simple. But we're not silly. We're not idiots. We're taking profits quite regularly. Yeah, you know, a local trade that we had here. If I just throw it on the Shark, this is what we were looking at. This is the other day. We were looking at this. And this is what I was posting. Where's the group? There's the group. We're posting this in the group. Here. So obviously this was posted on the 18th, so this was 2 days ago. You know, we were joking around, speaking of sharks, ready to burn it down. If we open that up so we can see it larger. There we go. So this is what we were looking at. We'd seen the A come in, we'd seen the B come in bang on the 382, lined up nicely with the VWAP. We were looking for another push up. We got this push up. Now the target for a C on the Shark is anywhere between the 1.133 and the 1.618, so anywhere within this region was valid for shorts. And lo and behold, what happened? Well, this is what we were looking for, and the Shark played out, came down to the target region, which is anywhere within this green box, got the target region. And then what we found is the follow-on target. Obviously, this is a harmonic pattern. Now, the Shark can sometimes merge into a pattern called the 5-0. Now, what does the 5-0 look like? Well, the 5-0 would then bounce from the target box back into the 0.5. And look what happened. We bounced back up, back into the 0.5, and we were talking about this in the group at the time. In fact, we even had a squiggle. So if we go back into the group, let's see if we can find the 0.5. The 5-0, which was somewhere down here. There we go. So this was the same night after the target of D got put in. The same night, we were saying, now we're looking for the 5-0. So we're looking for a push back up, back into this consolidation, played out nicely, and then looking for that drop. And then what happened through the night last night, we got that drop. So this is the power of harmonic patterns. You know, it's the only patterns we trade in the group. We don't trade your triangles, we don't trade your wedges, you know, or your head and shoulders and all that stuff, because the hit rate on them are really low. But the hit rate of harmonic patterns, once you understand how to identify them and how to trade them, they can produce really good returns. So, you know, if you guys want to learn how to do that, then, you know, come check out our Discord or check out our website. We'll talk about that towards the end of the video. But, you know, that's what we're looking at locally. So, again, if you're not experienced in trading these tight ranges on low time frames, you know, this is down on the 15-minute, then just sit out the market. Why are you getting involved? Why are you wasting your capital? You know, wait for that confirmed trend that you're looking to trade, and then trade it. You know, if you can trade this local price action like this, then yeah, get involved. But you wouldn't be describing it as chop. You'd be describing this as, you know, as a gold mine. You know, there's money to be made in a range if you understand them. Okay, so that's what we're looking at to the downside. Now to the upside, again, on a macro level, we're looking here on a high time frame level. We've got quite a lot of resistance above us. Quite a lot of resistance, because obviously we've got all these consolidations to contend with. You know, Bitcoin at the moment is in a phase of just stop running. You know, we just keep stop running. We've been stop running all the way down, and we've been stop running sometimes to the upside. So if we do move up, then we could be looking for a stop run of these. We could be looking for a stop run of these. We could be looking for a stop run of these. If it does get above that, then we're looking at the overall range EQ. Because this, as we've been saying for a while, is a very thin area. And if it does get above there, into this region, it's likely going to move quite fast. So if it does move quite fast, then maybe the EQ won't offer any resistance, and then we'll be looking back up at this value area high. Clear above that, you'd be looking for an SFP of these. If no SFP of these, then again you're looking at all this noise here, and we can see that in the volume profile. There's so much noise here. One other thing to be aware of is we're seeing quite a lot of this posted at the moment on Twitter and on YouTube. You know, people are comparing this price action to what happened back in 2018. 2017, 2018, where we were making this kind of descending triangle sort of pattern. I don't know where they're using the points from, but maybe something like this. And then looking like this. Now, we know from experience that when every man and his dog is looking at the same kind of structure, what normally happens? Well, yeah, does it play out well? So obviously, one thing that we're potentially aware of right now is, like we've been saying, we've got these June lows here. What could happen? We could break down here. Everyone thinks this is a repeat of 2017, 2018. Swing fail, like we said, get back in, and then move up. That'd be one thing to look out for. The other thing to look out for right now would be, what if it does break this structure to the upside? Everyone gets bullish, starts longing in, but maybe the move is weak, and then it just falls back on itself. You know, so it's when everyone's looking at the same sort of pattern, just be cautious. Just be cautious. You know, a similar thing happened back here. You know, you had your moon boys and all your crazies, you know, calling this, you know, some sort of wedge, and then what happened? It actually broke out at the bottom of the wedge, and what did we see at the time? We saw loads of shorts piling in down here. Loads of shorts piling in, and that was a great trigger then for a long. You know, did we know it was going to go this high? No, we didn't. But it was a great trigger for a long. Why? Because we're in a range-bound environment. You know, very, very simple. You know, people trying to overcomplicate this. It was a range. It was a range. So, you know, once you start throwing up all these other shapes and all these other patterns just to throw you off, quite simply, all you needed was a parallel channel going horizontal. So rather than thinking that, oh no, we're breaking down here and we're short, which then gives bulls the fuel to push price higher, you know, all you needed were a couple of sideways lines. That's all you needed. You didn't need all these fancy triangles and all these crazy shapes. And obviously that's just something to be aware of right now. What's going on? Could this be a complete repeat of what happened in 2017, 2018, and we just basically break to the downside and continue moving down? Yeah, it could. It could. It could. I'm not saying it can't, but I'm just saying it's something to be aware of, something to look out for. Okay? So that's what's going on locally. And also on the higher time frame. So if we come back here, throw the macro range on, and obviously that's what we're looking at. So with this being the point of control, you know, we can spend a lot of time around here. While people just keep building positions on both sides of the markets, and we know that that's happening right now because we can see that from the open interest. So if we take a look at the current open interest, let's just change this to a let's change this to a 12-hour. Let's populate. And we can see right now that open interest is, I mean, this is on Bybit, but Binance is also very similar right now. It's, you know, it's sky high. It's open interest. Now, it's not sky high in terms of, you know, what's happened before, like when we were at 69k, etc. But for this local range, this is the highest the open interest has ever been. So what does that mean? That means there's a lot of people opening up new positions. So do we know if these new positions are to the upside or to the downside, whether they're longs or shorts? No, we don't. We can't tell from this. But what we can tell is there's a lot of positions in here. And typically speaking, when open interest gets very overcrowded like this, and positions get very overcrowded, then typically speaking, it leads to a bit of a flush out. Okay, now, does that flush out go to the upside or the downside to wreck longs or shorts? Who knows? But all we do know is it's something to be aware of. Keep an eye on. The other thing to be aware of as well, if I go back over to TradingView, is something that we've talked about quite a while. In fact, we did actually bring it up on a public YouTube video quite a long time ago, is a fib time pull. And it's a fib time pull that's been calling some key pivots on the market. If anyone's been a subscriber, you've probably seen this before, but we can see here that it's called highs before moves, it's called highs before retracements, it's called highs before moves. Obviously it called this move down here high, it called the low, and then now we're sitting on another fib time. So this is the 5 spot now. So something to be aware of. Technically, this actually comes into play either today, tomorrow, or Saturday. I always give things a little bit of breathing room, especially when you're looking on a macro picture like this. But it's something to be aware of, that chances are we are going to start seeing either the beginning or the end of a large move soon. Okay, so it's just something to be aware of. And that's likely going to come in towards the end of this week. It could happen over the weekend, but it also could happen over the next 24, 48 hours. So it's just something to be aware of. Okay? And that is about it. So obviously, if you guys want to learn along with us, learn how we can trade patterns like this, learn Elliott wave theory, learn how to read order flow, and understand, you know, things like we've just been showing there with open interest, you know, CVD, the divergences that we've been quite vocally posting about on Twitter. Then first and foremost, check out the links in the description, where we've got a link to our website, which, you know, I share this every single time. On the website, you've got access to our free Discord down here, where we'll get a load of educational content in the free group and a load of people sharing their ideas, loads and loads of different trading styles as well. So it's not just the same trading styles as what I teach, but there's loads of others within there. And obviously, if you guys want to take your learning to the next level, then come join us on our website. Yes, it's a paid service, but you've got access to well over 50 odd hours now of educational content. We do 4 live streams a month, which includes educational live stream, and also I share my high time frame ideas and my low time frame ideas. Obviously, as I've said before, if you don't follow us on Twitter, then the link's down in the description below. And finally, if you guys haven't seen it yet, we started our altcoin technical analysis. So I'll leave a link to the video at the end of this one, to our most recent one, which, if memory served, it included INJ and QNT. And if you do want to see an altcoin featured in next Tuesday's video, then leave a link in the comment. Leave a comment down below. That's the words. I don't understand words today, as usual. And we'll look to feature it on next week's altcoin video. Okay, so that's it for today, guys. So thanks very much. If you enjoyed today's video, smash the likes, make sure you subscribe, and we'll catch you next time, as you were. Bye bye.